Hey everybody, this is Alan Jackson once again. Today we're just going to talk about what a stock is. Now to answer that question, I think the best way to go about that is to tell you what a stock is not. So a stock is not some sort of a lottery ticket. It isn't a get-rich-quick scheme. It isn't just a piece of paper that you own. A stock is literally an ownership claim to the assets and the earnings of the business. And that's going to be a very critical distinction because, if you look at the financial media or financial publications, they want to make you think that it's some kind of short-term mechanism where you can get riches or where you can get rich very, very quickly. The way I like to look at it is a stock is literally an ownership claim to the assets and the earnings of the business. If you own a share, you are literally buying a small piece of the business, and you will profit and you will prosper in direct proportion to your claim to the earnings of the business. If you own 1% of Bank of America, if Bank of America does well, you as an investor over the long term will do well. And sometimes, as an owner, the business might be doing well, but the stock might be going down. There might be some kind of, there might be a disconnect between how the business is doing and how the stock's doing. But over the long term, you're going to benefit in direct proportion to how the business does, and that really talks to the earnings and management of the business. To better explain this, I'm going to give you an example. So let's say a man named Dominique Davis lives in Miami. He's walking around Miami and he sees, man, all these beautiful people around here. They want to stay in shape. They want to look good. So I think it might be a great idea to start a personal training studio. So Dominique Davis goes out and he wants to start his own little personal training studio. And so, he does his research. He looks at how much the land will cost, how much the building will cost, how much the equipment will cost, and all that stuff. So he wants to start his little personal training studio. And he does the market research and he gets the cost, but he also looks at the business prospects for the personal training studio, and he looks and he figures out that, man, this is going to be very, very, very profitable for me over the long term, right? I can make a lot of money investing in this business. So he does his research and he figures out, man, this is going to be a great business. I think there's ample opportunity for me to make money in Miami. It's a great market. There's a lot of people there. They all want to stay in shape. They all want to look good. So he figures out that the cost of the business will be $1 million. He works hard for, let's say 2-3 years. He works hard. He takes, multiple jobs, and he saves up $100,000. Now, he's $900,000 short. Now, Dominique, he's looking at, the market. He says, I don't really want to raise debt. I don't want to get a personal loan. I don't want to get a small business loan. Instead, I want to find investors. So he decides, I'm going to find 9 investors. And these investors, I'm terrible at drawing, but I think it'll give you a better grasp of what's going on here. So he goes to these 9 investors. Each he asks for $100,000 apiece. Let's give this guy a briefcase. So he goes to 9 individual investors and he says, if you give me $100,000, I will give you a 10% interest in the business. And so the investor looks at Dominique's research, and he looks at the market, he looks at his plans, and says, that's a good deal. I will give you $100,000, and in exchange, you will give me a 10% interest in the assets and the earnings of the business. So in this case, let's fast forward 5 years. So 5 years later, Dominique gets his customers, he gets his financing out, everything is in order. And 5 years later, the business is booming. He has a lot of customers, very great business. People love him. People love his personal training. And so now, the business has grown substantially compared to what it was 5 years ago. And now let's assume that the business is now worth, instead of the original $1 million Dominique put and the investors put in, it's now worth $2 million. Now the original 10% claim that the investor had is now worth $200,000. How did I get that number? Well, it's $2 million times 10%. That's how I got the $200,000. So literally over that 5-year time frame, the investor's interest doubled. And the point I want to make to the viewers out there is that it doubled because the business did well over that 5-year period. Now, if the investor wants to sell, if he wants to sell his interest, or if he wants to buy more interest, he can do either one. But the value of his 10% interest increased in large part due to the performance of the business overall. And that's really the point I want to make with stock and in investing in stock, is that you want to look at the future prospects of the business. You don't really want to look at the short-term movements in the stock price or the short-term movements in the business. What you want to look for is the normalized operating earnings of the business over the long term or over a business cycle. And if those earnings, and if the business does well over that period, as an owner, you will do well as well. And that's what a stock is you're literally buying a piece, a very small piece albeit, of the assets and the earnings of the business. And that's really what I want to stress to you guys, or you viewers out there. It doesn't depend on the short-term movements like the financial media or the financial publications want you to believe. It really depends on the long-term prospects of the business. So, in essence, that's what a stock is. Now, you can buy stock as an individual investor. You can literally buy stock in pretty much any publicly traded company. You can buy stock in Walmart, IBM, 3M, DuPont. You can buy shares of any of those companies. And you are literally an owner. A very small owner, albeit, but you're literally an owner of the business. And you will prosper in direct proportion to how those businesses do. So this is Alan Jackson. If you have any further questions or comments or concerns, please post it. If there's any kind of topic you want me to discuss, I'll be happy to do it. Just please post it or email me. Thank you guys for watching, and I hope I helped you guys. Thank you.